let's dive right into this. Welcome to today's Morning Explainer. We've got a ton of ground to cover today, from geopolitical tensions shifting global yields down to actionable tactical levels for the major currencies, and exactly where Indian markets are standing right now. Look at this number, 4.66%. Overnight, the U.S. 10-year Treasury yield absolutely surged to hit this, and that's the highest level we've seen since February 2025. Now, it has eased back just a little bit toward 4.59, but make no mistake, this spike completely sets the stage for today's high-stakes market environment. And the main catalyst keeping everyone on edge? Well, it's probably best summed up by this stark quote. Diplomacy is alive, but barely breathing. Markets are actively having to price in higher for longer inflation and rates because of the rapidly escalating situation in the Middle East. So here's your rapid-fire overnight geopolitical wrap. President Trump paused an Iran strike following requests from Gulf states, but the U.S. military remains ready for a full-scale assault. Iran rejected a revised proposal. 85 U.S. ships have been redirected with transit warnings in Hormuz, and as a result, Brent crude is hovering uncomfortably near $110 a barrel. This is the primary driver keeping oil elevated and markets anxious right now. It's a literal tug-of-war out there right now, and this perfectly illustrates it. Investors are desperately trying to balance opposing forces. On one side, you have inflation fears driven by these geopolitical oil spikes. On the other side, there's this massive optimism from AI-led tech productivity. This dynamic left U.S. markets mixed yesterday. The Dow managed to eke out a 0.32% gain, while the Nasdaq fell 0.51% for a second straight session as tech started weakening under those rising bond yields. All right, moving to Section 1. Currency technicals, majors, and yields. Let's look at the actionable levels. Starting us off with the DXY. The dollar did soften just a bit, tracking that slight pullback we saw in the 10-year yield. Our tactical view here remains buy on dips. You're going to want to watch for key resistance at 99.64, with support mapped out at 99.00, and the 98.70 to 98.50 weighted moving average. But look, we all know technicals don't operate in a vacuum, right? Your immediate fundamental triggers today are the ADP employment numbers and comments from Fed Governor Waller. Any sort of hawkish tone from Waller is going to immediately test that 99.64 resistance. Moving over to the euro. Now, the pair did bounce pretty sharply from 1.1612 yesterday as European yields eased up. However, the overall structure remains sell on rise. And that's largely due to Europe's severe sensitivity to these Middle East energy disruptions. Resistance is sitting at 1.1656, then 1.1688, while holding that 1.1612 support. To see if the euro can actually crack those resistance levels, you're going to want to keep a close eye on today's Eurozone trade data. Plus, we've got scheduled comments coming from the ECB's Philip Lane. Over to the British pound. Cable actually bounced back the hardest against the dollar as U.S. yields retreated, and that was aided by the UK 10-year bond yield falling 14 basis points. Still, the overarching structural play here is sell on rise. Resistance is firmly at 1.3450. Support is at 1.3393, with a critical floor to watch down at 1.3326. You need to watch those support levels closely around today's UK data drops. Unemployment is expected to hold steady at 4.9%, but wage growth remains stubbornly elevated near 3.8%. On top of that, higher debt servicing costs are really pressuring the government's fiscal flexibility right now. Okay, USD JPY. We are at a really critical juncture here. The pair broke above the key 158.78 pivot, and honestly, nothing seems to be helping the yen right now. Watch this pivot closely. Resistance sits right above at 158.91, followed by 159.77, with support down at 158.46. So where is this immense pressure coming from? Japanese yields. The 10-year is trading uncomfortably above 2.70%, which is just a massive pressure point for global bonds across the board. Add in the surprisingly strong Q1 GDP growth and high oil prices fueling inflation, and bets are surging for a Bank of Japan rate hike in June. Section 2. India markets, Rupee stress, and Nifty levels. If you want a clear picture of market stress, just look at this number, 96.3450. That is a record low for the Indian rupee. It's down nearly 2% over just the last 7 sessions. That makes it one of Asia's absolute worst performers, and that's even with RBI interventions trying to stem the bleeding. So what's the why behind this massive drop? Well, It's pretty much a perfect storm of external pressures. Foreign institutional investor outflows have exceeded a staggering $23 billion since March. Combine that with elevated energy import costs with oil near $110, and you get expectations of a widening balance of payments deficit. Meanwhile, India's 10-year bond yield jumped to 7.13%. Look, seeing crude and global yields climb together like this, it's the market equivalent of getting a headache and the bill at the exact same time. As for the tactical outlook on USD/INR, buy on dips has just been working flawlessly. Our previous 96.18 target is hit, done, dusted. The next logical upside target is 96.90, with your new support levels stepping up to 96.18 and 95.82. Finally, let's talk about the Nifty 50. Equities ended essentially flat yesterday, but don't let that fool you, it was not calm under the surface. A 2.4% pop in IT stocks really masked significant broader weakness, particularly with small and mid-caps declining. The tactical view remains sell on rise. Key resistance is the 24,806 to 50 weighted moving average and 23,950. Supports are sitting at 23,578 and 23,439. Which brings us to the ultimate question as we head toward the opening bell. With the yen breaking past key pivots and these geopolitical supply concerns remaining so severe, will the mere specter of BOJ intervention be enough to deter yen sellers today? Or is $110 crude oil just going to completely dictate the next global move? Keep these tactical levels close by today. Thanks for joining this explainer, and we'll see you in the next one.